It's best to buy when there is blood in the streets, when most people have given up, when most people rather want to bet on falling prices than on rising prices. That's what we see here in this chart. This is the perpetual futures funding rate. So this is bets on the Bitcoin price. Whenever the funding rate is positive, that means there are more longs than shorts. More people are betting on rising prices than on falling prices. So it costs money to get more exposure to Bitcoin. Whenever this is negative, however, there are more pessimists around. So the shorts have to pay the longs to bet on falling prices. And have a look at what happens during times like this. When the funding rate is very negative, when there are more shorts, this also tends to be the time when the market bottoms. Buy when there is blood in the streets. We've seen a bottom here as well. Here as well. Check this out. This was also local bottoms here as well. And here as well, just before we rallied. Currently, unfortunately, the funding rate is not negative. It's at 9.9%, relatively high, not historically high, but definitely no extraordinary value. But this is something worth checking. So this chart comes from checkonchain.com. Just search for this Bitcoin perpetual futures funding rates. And this is negative. It might make sense to buy, at least short term. This is actually something fundamental where I disagree with many others. Most long-term investors say that time in the market is more valuable than timing the market. It's very hard to beat the market. And while it is very hard, it's still a player versus player game. It's not impossible. I'd argue that time in the market isn't worth that much anymore as it used to. This is the Bitcoin US dollar chart. And we can see that in the early days, the price appreciated very, very quickly, while a few years later, the rallies were much more muted. They weren't as quickly anymore. So this is a line with a decreasing slope. And interestingly enough, the bottoms align pretty well. Where are we currently with that bottom? The answer is at roughly 46K. I'm not saying that we go there anytime soon. It rather looks like we are medium-term bullish, but this is a potential interesting level to be above average exposed. To not just dollar cost average in with the regular amount, but to find some kind of way to buy such bottoms with even more capital. Now, this is the US dollar chart. And yes, every top tends to be higher than the one before. This is the nature of a growing asset. But once we look at Bitcoin relative to other risk-on assets, for example, the Nasdaq 100, we don't necessarily see that much more growth. Isn't that surprising? Yes, in the early days, we did have quite nice higher highs across the board. But now, in the last 4 years, while the growth is not zero, it seems to be very small relative to the potential additional risk we take with Bitcoin relative to technology stocks. The bottoms still seem to grow at a relatively quick rate, but it seems like we are topping out earlier, unless we suddenly get a surprise rally that brings Bitcoin to 200 or 300K. This year would mean roughly a doubling from the current level. And then the growth rate doesn't look that meager anymore. Now, some people say we might even get a super cycle. Bitcoin might explode, might make a 10x. We're going to hit $1 million. And one of the reasons, one of the arguments is that Bitcoin is running out, that the balance on exchanges is going down. Now, measured in US dollars, that Bitcoin balance tends to go up. But that's also because the Bitcoin price is going up. Here is the exchange balances measured in BTC. And while this is slightly coming down for the last 1.5 years, I think we are very far away from Bitcoin suddenly running out. I've got my strong doubts that we're going to see a super cycle anytime soon, at least based on the balance on exchanges. I rather trust the long-term trend. The long-term trend, of course, is still bullish, measured in US dollars. Will it be as bullish relative to other risk-on assets? Time will tell. There are clear changes that aren't that great. Again, this is Bitcoin's price relative to US dollars. What we see here at the bottom, that's the rolling ROI. So we take a data point, look at the price 1 year ago. How much return had we bought just 1 year ago? At the beginning, of course, Bitcoin rallied extremely quickly. So the best market timers got a 90x on their return. If you then bought into the hype and you then held for a year, then you had your 80% decline after Mt. Gox and Silk Road collapsed. And so what seems to be happening is that from one cycle to the next, the returns become more and more muted. And I find it quite fascinating how those tops align. What I also find interesting, how the bottoms align. Now with the bottoms, there is no real clear trend. We had a medium low over here, we had a lower low in 2019, a somewhat higher low in 2022. There is no clear trend. Somewhere around 80% negative performance in the last 12 months tends to be the bottom of a bear market. That's at least historically what happened. This very thin line here, that's the zero line. So if you made no money at all in the last year, and that's pretty much what happened in 2025. No gains, no losses. And while this doesn't necessarily look that great, it still implies that in the positive case, we could see Bitcoin potentially rally by more than 100%. Now, at some point, of course, this has to break. And there's another Bitcoin chart where it seems like we are very close to breaking that trend. And again, that's not in US dollars, that's measured versus the Nasdaq 100. Right? How are different risk-on assets doing? And interestingly enough, here the recent bear market bottoms do align to show us less volatility over time. So in US dollars, it seems like the bear markets do not become easier. Only the bull markets give us less return. So in the end, a worse risk versus return trade-off. For Bitcoin relative to the Nasdaq 100, both the risk and the return decline over time. So there's simply just a reduction in volatility. The outperformance of Bitcoin relative to technology stocks diminishes, but so does the potential risk. Of course, this does have to break at some point as well. To be more precise, in 1.5 years. And this chart very much aligns again with the very little outperformance of Bitcoin relative to the Nasdaq 100. But there is still some hope, right? There is, at least in the short term for this year, the potential for Bitcoin to outperform the Nasdaq 100 by maybe 90%. But clearly something has changed over time. Clearly the risk to reward isn't as great anymore as it used to be a few years back. And that's understandable for a market that's maturing. Here's the number of Bitcoin searches over time. It peaked in December of 2017, and then from one bull market to the next, fewer and fewer people search for Bitcoin. So the excitement is slowing down. The market isn't expanding that much anymore. And really, since December of 2017, is also the point in time where the outperformance versus other risk-on assets started to slow down dramatically. So this seems to be a structural change. This seems to continue. If there's nothing dramatic happening with Bitcoin and we suddenly hit $300,000, $400,000, $500,000, which is not extremely likely given the market caps, I think we have to live with this new reality. Mature markets don't return as much as new markets. Of course, very long term, I do expect that Bitcoin will at least return as much as the US dollar devalues over time. The devaluation of the US dollar is 6.8% per annum. So over the last 66 years, the supply of US dollars 77x'd, and that growth is relatively constant. So this is now on a logarithmic scale. The number of US dollars circulating tends to go up. But of course, the inflation rate for Bitcoin is much smaller. It's 0.83%. It is not 6.8%. So there's at least 6% per annum to be made in Bitcoin. Potentially more, because some Bitcoin gets lost over time. This here is the BTC that has not moved for the last 5 years, and this tends to trend up. This is as percent of the total supply. So Bitcoin does get more scarce over time. Probably there's more Bitcoin getting lost than gets mined every year. So really, the circulating supply of Bitcoin is likely going down, which brings its very long-term expected growth rate to at least 6.8%. Now, what charts like this show us, right? Charts of diminishing return over time, is that it becomes more and more important to time the market. In the early days, it was okay to just be long in the market, to just buy and hold, to set and forget, to dollar cost average in. But as the market matures more and more, timing the market becomes more important. It was already great to time the market beforehand, as in avoid those 80% losses in a year. But now, since the upside also diminishes, having more allocation whenever we are at the end of a bear market is vital. And then of course selling as we go up. Here's a good reference point. This is the average cost basis of the market, the realized price. So we look at all of Bitcoin that have ever moved. We check at what price did that Bitcoin move. And then we can determine if the average market participant is currently in losses, as over here at the beginning of 2019, or is in profit. So that's when the current price is above the realized price. Currently, that average cost basis is at 56K, which interestingly enough also aligns quite well with this long-term support line that we drew. 56K, that's roughly over here. And so hopefully you're following this channel already for a while. I like to time the medium term with moving averages. Historically, the 44-day simple moving average worked the best for Bitcoin. This is the back-tested return. So we're following the trend. We bet on rising prices whenever we are above. We bet on falling prices whenever we are below the moving average. That way we protect ourselves against the bear markets. We make more money during bull markets. And according to this backtest, this gives us annualized alpha of roughly 115% per annum over buying and holding Bitcoin. So every year our Bitcoin stack more than doubles. Of course, this is back-tested performance, but we also put this into practice with this copy trading pool that's currently up roughly 10%, while Bitcoin, since we started, lost 22%. So again, that's the idea of timing the market instead of just time in the market. Just buying and holding will bring us some return, but those kinds of returns will be weaker and weaker over time. If you're interested in joining this copy trading pool, then of course, feel free to check out the premium membership. This is where I share how to get this all set up without having to do the trades manually. Of course, you can also manually just go long whenever you're above, short when you're below. Simply just watch the price regularly. Looking forward to seeing you on premium. Also looking forward to seeing you again here in YouTube. Thanks for watching. Cheers.